If you want mass market adoption, the one thing I've realized in anything, in any product, is you need true simplicity. And this is why, I would encourage people to really embrace the simplicity of what Bitcoin is, which is it's basically schmuck insurance in case the people in charge really fuck it up. I really had a perception that the Fed would be relatively constrained and operate within normal guardrails. I think what we've seen is that, there is nothing they won't do to prop up the stock market and the bond markets almost as a symbol of America's economic resilience. This debt crisis is looming. It's only getting exacerbated. We're only really pushing the can down the road. And the only thing left for the Fed to do is just a broad-based buying of any security, including equities. And that's frankly the only tool that they have left. And I think if they do that, you put a lot of pressure on the US dollar, and frankly, you put a lot of pressure on the United States as an economic system, as the sort of flight to quality bid security, because that's just something that nobody's ever done. The school teacher that makes $60,000 is just as important as I am, is the truth. What I was speaking about on CNBC was just my frustration about not wanting to acknowledge, where the Federal Reserve and Treasury were not acknowledging how the actual economy works. The United States is an economy where the overwhelming majority of the GDP is generated by consumers. And the way that, consumers lift up the American economy is by spending money. And when you take revenues away from the American consumer because they're unemployed or because they can't earn wages, then they're going to spend less, which means that the economy contracts and you have a recession. So first principles thinking would tell you that you put money in the hands of consumers, and you put enough money in their hands such that the amount that they have exceeds what they need to live, and then the excess spending they will spend. It forces companies to then reopen faster, hire people more. Invariably, what you'll see is then they'll also have to pay them more because, again, these consumers have more money. Putting a lot more money into their hands, where effectively you have to pay them more to come back to work, isn't a bad thing. It will recalibrate what is a very lopsided distribution of leverage. If you put a pilot who's not a great pilot, who actually really wanted to be a school teacher, in the cockpit of a plane, that person is much more likely to make a mistake that has huge consequences than a person who lives and breathes wanting to be a pilot. And that's also true of legislators. And so the reality is that, we have folks that will focus on short-term window dressing type solutions. Again, you can see it today in what the Fed and the Treasury are doing. We've massively increased the deficit and the debt. The United States government is now responsible for more than 50% of the GDP, which essentially makes us a quasi-communist country, except without any of the benefits. So, you still have sky-high healthcare and, exorbitantly high useless education. I just think that if people have been hardworking with their head down, they should have an opportunity to make sure that they don't get wiped out if the government itself just continues to make a string of bad decisions that then have rising consequences. And Bitcoin, to me, is the only thing that I've seen so far that is really fundamentally uncorrelated to that decision-making process and to that decision-making body. Because at the end of the day, any other asset class, equities, debt, real estate, commodities, they're all tightly coupled to a legislative framework and an interconnectedness in the financial markets that brings together many of the governments that are sort of behaving this way. And so the use case for Bitcoin, I think, become less and less as a product and more as an instrument. And again, then you have to think about what the underlying value of the instrument is. People try to make this case for gold all the time, that there's an industrial use for gold. And I would say maybe, but overwhelmingly, folks use it as an instrument to hedge other parts of their assets and other parts of their portfolio. Similarly, we will make the case ad infinitum for the industrial value of Bitcoin, but the overwhelming use case for the most people will be as a financial hedge. And if you want mass market adoption, the one thing I've realized in anything, in any product, is you need true simplicity. And this is why, I would encourage people to really embrace the simplicity of what Bitcoin is. It's basically schmuck insurance in case the people in charge really fuck it up. The gains typically go to the winner. when Obamacare passed, there was going to be a clear tailwind to health insurance. You could have bought a basket of health insurers, or you could have just bought United Healthcare. The basket would have performed okay. United Healthcare 10x'd. If you believed in smartphones, you could have bought a basket of things in 2010, and when the iPhone first got released, you could have bought Nokia and Motorola, or you could have just bought Apple. And Apple, frankly, just crushed everybody else. The point is that in any market, when there's a clear winner, it's not that these other things can't win, but there's a weird psychological effect that almost drives these second and third tier winners, which is a desire by people almost out of this sense of insecurity to not want to admit that there's a winner simply because they weren't the one to pick it first. And so what they do is they create these convoluted narratives and theses to basically anoint other winners. And yeah, can they win? Sure. But do they ever win like the category killer? No. There has been not a single market where you've been rewarded as handsomely for being long the number 2, 3, and 4 player as you are for being long the number 1 player. And again, it goes back to when things tip and go mass market, the average buyer makes the simple decision. And the simple decision is to go to the category defining winner and then set it and forget it. And so if you really want to make the money, my view has always been you find the one that's about to win: Facebook, Microsoft, Apple, Google, Amazon, and you buy it. But what you don't do is try to do some convoluted spread trade or, long the number 2, 3, 4, 5 person. What I've learned over time is that, I've really made my life much harder than it's needed to be, and I've overcomplicated a lot of decision making in my life. And as I've gotten older, what I realize is that the best decisions are the ones that are really instinctive and the most simple. You can use enormous amounts of data and you can find all kinds of clever ways of slicing and dissecting things. But at the end of the day, the simple decision tends to be the best and the most defensible and the most enduring decision. And one of the simplest decisions that you can make is to buy the category winner and wish that the whole category does well. Because if it does, as long as the category winner stays on top of the category, they will get the disproportionate amount of the gains. And that's just been completely true in markets, since time immemorial. I think that, the products that I've been involved in helping to build that have gotten to real massive scale, Facebook, Slack, just being a couple of examples, all of these businesses I've helped kind of get over, 100 million users. And what I'll tell you in my experience is there's simplicity in design, but also simplicity of ambition. And simplicity of ambition doesn't mean that you don't have a grandiose ambition, but it just allows you to frame and filter decisions in a more basic framework. And so then you don't get these, convoluted product features or implementation paths, etc. One thing to realize is that product development cycles on the internet also tend to move in a pendulum. And, like I said in the previous example of economic cycles, the economic cycle, the pendulum is between labor and capital. In the internet, the product iteration pendulum is between highly aggregated and highly fragmented. And right now we're in a very aggregated part of the cycle. You have a few companies doing many and most things for consumers, but it will break apart. It'll break apart because consumers get tired of the Swiss Army knife and they want more excellent, simple products for very specific use cases, and companies come and fill that gap. Part of what will enable that is that the standards of product development are becoming more open and more standardized. And so, apps speak nicely to each other. And all of that enables a much more open, collaborative product process. And then the other part is just that governments will become much more aggressive and trust busting. And so they'll break some of these big, gigantic products apart. So in all of that, I think we are going to become much more decentralized. And I think that the next 15 to 20 years of product iteration will be that. It'll be a lot of disaggregated services working nicely and neatly together. It'll also mean that companies themselves won't be nearly as big, but that's also a good thing. It's much better, I think, for people to have ambition to just build a $5 or $10 million company where they employ people and, they make, a couple $100,000 of profit and they live in a place that they want where they can have a, humane life and raise a family and be connected to their community. I think that kicks more ass than trying to build the next $500 billion mega behemoth company because a lot of that is just situational luck and timing that you can't replicate no matter how smart you are. Money is lubricant. And, when you have access to it, you can do a lot more things than when you don't have access to it. And I've been on both sides of this, so I can tell you this.